Hey everybody, welcome back to my YouTube channel. Thank you so much for being here. Today we are going to be talking about pullbacks. Now, when we're looking at the markets, we really want to sell in a premium and buy in a discount. So today I'm going to be going over the markets, kind of talking about what pullbacks I'm looking for and when to sell and buy based on premiums and discounts. So let's get started, shall we? We're gonna start on the daily time frame. Perfect. Now it is Friday. We did have somewhat of a down move yesterday, not as much as I would have liked. However, we did have a bit of a down move. So today I was kind of hoping that Friday we would see a little bit of a TGIF setup and trade down into some lower pricings, maybe take out yesterday's low, but so far we've kind of just been consolidating. However, we still managed to catch a sell in this kind of market just based on, hey, we want to go lower. So let's drop down to the 4-hour. I'm going to kind of go through this quickly because I really want to talk about the pullbacks and why we should wait for them. Perfect. So again, we did trade into this new week opening gap, which was awesome to see. We had a bit of a move down on Thursday, but then we came right back up. So we actually have all of this wick that I would have liked to see filled in, and potentially even just, filling in this gap and taking out these lows and this low right here. That would be ideal. We did come down to the consequent encroachment, but then we wicked back up. So now we have all of these wicks kind of there, so we kind of want to see them traded too. Let's drop down to the 1-hour. Now the 1-hour, I actually have this order block mapped out. We did trade into it on Thursday before moving lower, then we came back up, kind of consolidated a bit, we traded back higher into this order block again, into this wick before trading lower. So we're kind of using this order block as market direction. We want to see the market retrace off of this order block and continue lower. So watching this and seeing this is kind of gave us insights onto, hey, we want to see the market move lower. Plus we had SMT on the Dow. So the Dow did make a higher high, but the NASDAQ and the ES both were making lower lows. So we were like, okay, we could potentially see lower lows happen. So let's drop down to the 15 minutes. Perfect. Again, I really want to talk about the pullback, so we're going to be talking more about it on the 1-minute chart, but this is just kind of going through my thought process and what I was seeing in the market this morning. We did have a large opening range gap that we wanted to see traded to, and potentially, again, Thursday's low or sell side liquidity down here, and then Thursday's low down here is what we were intending to see happen. I wanted to see that happen. So we traded higher, taking out the London session relative equal highs. Took out this high right here. We didn't quite take out this high, making these relatively equal, potential for next week's setup to go higher. But again, we traded into this 1-hour order block and even this 15-minute fair value gap here before moving lower. We still see the buy side liquidity taken because we traded higher than this high, and we actually closed higher than these bodies right here. So we did kind of take out that sell side or buy side liquidity as well, plus trading into that 15-minute fair value gap and inside that 1-hour order block. So again, we just wanted to see sells happen, but we were waiting to see, like, okay, are sells going to happen? Are we going to continue reaching for these daily relative equal highs? Or essentially I was just kind of watching the marketplace. However, my bias was sells. We do see this nice run higher this morning, mainly due to the news release at 8:30 a.m. And then we created that opening range gap, something that we could look forward to target. So let's drop down to the 5-minute. Again, at open, we had another swing high into that order block, into that 15-minute fair value gap before going lower, breaking out of this 5-minute fair value gap. Seeing this, I was like, okay, we're not respecting PD arrays already, and we want to trade into this opening range gap. We in fact did trade into the opening range gap, breaking market structure before having this like a pullback, which I will talk about on the 1 minute time frame, but just know that we did have a break of market structure right here and not respecting these PD arrays. So we're looking for sell side liquidity to be taken down in these lows right here, and then eventually these lows right here. And if we can get animated Friday's low, or Thursday's low, but I don't know if we're gonna be able to get that, especially with today's price action. Like if we were gonna go for those lows, we should have already gone for them, especially since there's no news in the afternoon and it is Friday. So let's drop down to the 1 minute. Perfect. Again, we can see that break. We had this 5 minute fair value gap. We totally broke through it. Breaking market structure here, here, and then here we breaking market structure. We had that displacement run. We did trade back up into that fair value gap. However, that was at 954, so that was not our entry. And then we can see just like this down move. So this is displacement taking place. We are moving away from an order block extremely fast, breaking market structure. So what I did was I marked out this high to this low, and I was waiting for a pullback into a premium level before selling off. We didn't quite make it up into the OTE levels, but we did in fact trade above the 50% level. So my thoughts were, hey, if we are going to take this trade, let's take it at the consequent encroachment of this 5 minute fair value gap, because our stops would still be protected just above this high. And if the market does come back up into this fair value gap, we're less likely to go lower, just because I figured this would be a breakaway gap. Plus we have this down close candle here and this 1 minute fair value gap. So I wanted to see the market trade into the 50% level, but I didn't want to see it break this level right here. So our stop was protected at 5 points. And we can see the market did in fact have that nice pullback into the 50% level, trading inside this 1 minute fair value gap. And then boom, we take short-term profit just below this low right here. And that's an 11.5 point run. I mean, like, that's a pretty good trade. Now, let's say we missed this trade. Okay, so we did have the pullback into the 50% level. It didn't quite reach up into our OTE levels, which is 62 to 79% levels, and that's totally fine. Now what we can do is take this high, I'll delete this, take this high to the next low that was created. Again, we don't see the market trade back up into this OTE level. However, we did trade into that 50% level, which was nice. And then we took out this low again. So we're just going to move the fib level from keeping this high, but moving it to this most recent low. And then look at what the market does. We actually trade back up above the 50%, and now we're in our OTE levels. And look at how beautifully the market comes back right up to that fair value gap right there. We can put our stops above this high, well protected above those highs. Plus now we're inside that OTE range. We traded just above the 62% range, and then we traded lower to this low, but also filling in this sort of imbalance right here before the market did move higher. And that's totally fine. We're looking for those short-term trades, the 10-point trades, and this trade is a 16.25 point trade. I mean, that's a pretty good trade. So for me, with the pullbacks, I was always not the best at waiting for the markets to pull back into the desired price range. I was like, I see the market running, let's run after it. But allowing myself to kind of just let the markets do what they want. If they're going to run without me, that's fine. But we're going to wait for the pullback to happen. So the pullback did, in fact, happen twice on this run to this low right here. And we could see the market still wants to move lower. So definitely worth waiting for the pullback, because let's say we didn't wait for that 50% level here. I'll delete this for now. Let's say we didn't wait for that 50% level, and we traded on this fair value gap. I've done this in the past, so I can confidently say that most of the time it doesn't work. Most of the time it's going to hit your stop, or you're going to be in a lot of drawdown where you could have just waited for that 50% level. This fair value gap is not inside the 50% above, like in a premium at all. It's down here below the 50% level. So we're entering still in a discount for that sell. And yes, it can work sometimes, but most of the time you're in this drawdown, you're kind of facing this heat, you're like, oh my gosh, my stops are going to be taken. Plus you don't get a very good entry, so it's harder to reach those 10-point profit targets. Like for me, this would have hit stop loss if I would have entered on this fair value gap. So it's kind of important to, well, it is important to wait for those pullbacks. Even when you think the market's going to go without you, look at how we traded higher into this fair value gap, but also into this fair value gap, which was above the 50%. Plus, you just get a much better entry. And your stop loss can be at a much better area in the market. So it's definitely worth waiting for that pullback. That's why I didn't enter into this fair value gap right here. We were patient and we wait. We wait for at least that 50% retracement to occur. And again, it happens here from this high to this low. We see the market trade into that 62% level before moving lower. And then we could even take this high to this low right here. The market trades into that perfect OTE level, the right one right in the middle. Look at how we traded right into that before moving lower now, potentially taking out these lows and this low over here. So definitely important to wait for the retracement, wait for that pullback to get the best entry and the most acceptable risk. So I highly recommend using the OTE levels, even if it's just to get to the 50%, just to kind of know where you are in the market and where you're entering, if you're entering in a premium or a discount, if you should be continuing to wait. And don't get me wrong, there's going to be times where the market just takes off without you, pulls back a little bit and then just goes. But like days like today where we could wait and see, hey, like this is a pretty nice run right here. Let's measure it out. I want to wait for at least the 50%. What's a PD rate I can use to get in at 50%? Well, I'm going to use the upper half of this fair value gap. And our stops are well protected up here, just above this fair value gap. And look at how the market just plays out beautifully. We come back up into this level, into a premium. We sell at a premium. We move lower, taking out this short-term low. So definitely would recommend using premium and discount. So I hope you guys liked this video. I hope you got something from this video. Let me know if you want to talk a little bit more about premiums and discounts. And yes, I will see you guys all on Monday. Hopefully I'll have a day in the life uploaded for you guys to enjoy. And I hope you all have a wonderful weekend. We'll see you on Monday. Bye for now.